Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and trading view with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective. And in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video till the end, and I will see you on the charts. In today's video, I want to speak about EURUSD because at the moment we do have quite interesting price action and structure. Starting here from the monthly, in fact, we can notice how at the moment the market is filling in with this current candle, the wick of the previous candle. In fact, we spoke about this pattern many times. When you see a candle with a very long wick and a red body, what you expect is for the next candle to fill in the wick. So here in the monthly, everything is playing out as it usually does. Now, if we look at the structure, we can also notice how this area was acting as very strong previous monthly support here, and again here, which was tested a few months ago, rejected to the upside, but then the market has now broken below the zone. And as we know in the market, previous support, once it is broken to the downside, is turned resistance. And in fact, if we zoom in, we can see how the market at the moment in this current month has just tested with this top of the wick, the previous support and resistance, and has already started rejecting it to the downside. Now, if we drop down on the weekly time frame, what do we see? Now, from a weekly perspective, what we must notice is that we did have the creation of this weekly M pattern. Now, in general, after the creation of an M pattern, what we expect is for the market to create a move to the upside to go and complete the pattern at the previous support and resistance before then printing the continuation lower. And in fact, we can see that is exactly what the market did. It created the M pattern, went and completed the pattern at the neckline, and at the moment is printing the continuation lower. However, in doing this, we must notice how the market is currently printing another pattern, which is an M pattern in this case. Now, in the case of an M pattern, you want to see also here the market create a move to the upside and complete the pattern at the neckline. Here, it is at this level, which is the previous support turned resistance. So from a weekly perspective, what we could expect is maybe be a little bit more bearish continuation, but overall, we would like to see the market create a move to the upside to this level to complete the pattern at the completion level. If we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the net positions, what we can see is that with the last report, we had a massive decline in the net positioning, going from minus 34k to now having minus 42.7k net positions. So from an institutional perspective, what happened with the last report is that we had 7.3k shorts added and almost 1,000 longs getting closed. Now, what this brings is 242k shorts positions from an institutional perspective on the euro and 199k longs, which is very bearish. And in fact, we do see that reflected in the price action with the market creating this continuation lower because clearly institutions have been shorting. And actually, if you check the data for the euro, you are already checking EURUSD because all currencies on the spot are traded against the USD. So if you're checking the data for the euro, you're actually already checking EURUSD. So even though we could expect this potential rejection to the upside and completion at the neckline, this should only be a short-term move before then getting more bearish continuation. Dropping down on the daily, what do we see? Now here on the daily, we can see how the market is starting to become quite overextended to the downside and in need of a correction, especially because we are currently about to test the very strong demand and support that the market created when it printed this wick, preceding all this rejection to the upside. So there is definitely the possibility for a short-term longing opportunity back to the neckline of the M pattern. And then, yes, we do expect the market to follow through with more continuation lower. But first, we would like to see a short-term correction, potentially also to then see more shorts added from an institutional perspective from a better price when it comes to the institutional side of the market. And then we would like to see more bearish continuation, but approaching the situations one at a time. First, we would like to see the short-term move to the upside. Now, how we could be approaching such a move. As usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to a bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside and for the market to complete the pattern at the neckline. Now, if you do know what I'm speaking about when I say valid entries and this kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to access my entire course with all the rules of the strategies, and you also have the possibility to gain access to one-on-one mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is exactly the one that we have just used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll down, you can see that at the moment I'm running a special promotion in which I basically have a massive discount on the upfront price of the mentorship program, and I have also partnered with the forex broker Blueberry Markets. So if you open an account with them, you have the possibility to get a full refund of the mentorship program price credited back in your trading account. And if you scroll lower past the testimonials, you will see that you have the possibility to gain access here directly with the email and password that you will create during the checkout. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you, and I'll see you in my next video.